All right, so what you'll see now is just a difference between the two different lists. So again, and I know I'm repeating myself, but it really is that important. These two lists both have to be looked at. So we're not talking about on one occasion I can look at one and the other occasion I can look at other. The two of them together comprise the sanctions regime in relation to money laundering and terrorist financing in South Africa. So the one on the left is the one that is specific to POC-DOTARA, which is the terrorist-related or terrorism-related legislation, and the one on the right then refers specifically to the FIC Act, so sections 26 A, B, and C. Okay, so the applicable UNSC resolution, so remember they come from under Chapter 7 of the United Nations Charter. They release certain lists, and then obviously we need to adopt those lists into our legislation. So the applicable resolution then under POC-DOTARA is going to be, we normally call it the UN 1267 list, okay, and then the successor resolutions. Now, a successor resolution, all it means is this is my draft number one, and as the years progress, either something's going to add or something's going to fall away, and then they're going to add a successor resolution to that. But the main one then that we normally talk to is UN 1267 list, and then from there, amendments are made. In comparison then with the TFS regime in terms of the FIC Act, you'll see there's quite a few lists, and this was what Lise was mentioning earlier. She thinks there's about 30 odd lists, and these are the specific lists that sit under the TFS in terms of the FIC Act. Now, who issued them? We already mentioned in both instances is the United Nations Security Council. From a South African perspective, who is then responsible for them? So again, remember we said earlier, you know, there's an international standard. They set these lists. We now need to implement and bring it into legislation in South Africa. And currently these two obligations are then split, or these two lists are split. So the FIC is responsible for the sanctions regime that sits under Section 26 of our Act, and then the South African Police Services is responsible then for the UN 1267 list. Okay, so what does that mean? That means that we are responsible when we receive the updates, we have a look at the list, we publish the list, we make sure that it's available, you know, for South African residents to have a look at, to make sure that they can validate against it. In terms of the focus of the resolution, so the UN 1267 list focuses on designated sanctioned persons, and these are linked to certain terrorist groups such as ISIL, Al-Qaeda, and also associated individuals that are linked to them in terms of terrorist financing. So that is then the focus of that particular list. And, you know, when you do search that list, with all respect, you will see that there's a very specific kind of naming convention that would go along with that list. With regards to the TFS, or Targeted Financial Sanctions, in terms of the FIC Act, this relates specifically to the threats of international peace and security, which includes the proliferation of weapons of mass destruction, oppressive regimes, or human rights abuses. So you'll see it's a little bit different, because the one on the left, UN 1267, you know, really does focus on those terrorist groupings, whereas the one on the right, so the one in terms of the FIC Act, really talks around, you know, almost that facilitation. So if you have a look at proliferation, I know the first time I saw that word, I did Google it, and all that it means is it's the increase. So it's you've actually providing whatever resources you have to increase the amount of weapons that are made available for the purposes of mass destruction. So there's a difference between the two. In terms of the applicable legislation, we already said the UN 1267 is in terms of POC-DOTARA Section 25, and in terms of the FIC Act Section 26, Big A, B, and C. The reporting obligation, you'll see the reporting obligation is very much the same. We did speak to them a bit earlier. So you report both in terms of Section 28A of the Act. Section 28A of our Act then refers to a TPR, or a terrorist property report. And this is a factual report. So if you find someone that are on the link, listen to me, that are on the list, you report them. Okay, and that's the end of the discussion. I saw a few questions, you know, is there a tipping off provision? Can I still get my money if they owe me money? I owe them money, you know, should we be paying out? We're going to talk about that now, but just know that your first obligation is you have to report them to us. It's a factual report. It's not like a Section 29 report where, you know, there would be a tipping off if you were to advise them of that. Okay, Section 29 then Section 29 applies to all accountable institutions, reporting institutions, and every person. So essentially then no person in South Africa should be allowed to deal with any person on these lists. It's not limited to accountable institutions. It's just that accountable institutions are the only ones who have the reporting obligation to the FIC. Okay, so Section 29, remember Section 29 is a bit different. Section 29 is a suspicion. So you don't have a fact. You do not know for certain that that person is on a sanctioned list. And this is now for both instances. Or in the event I mentioned a bit earlier, they might be on a different sanctions listing, maybe the UK listing or the US listing. And not just that alone, but in that you do find that there is a suspicion. That could be a trigger event for you to submit a Section 29 report. Okay, there you would have tipping off provisions. Tipping off means exactly that. If you tell them, listen, I've already reported you through to the FIC, that is an offense. You're not allowed to tell them that. If you wonder why, well, what the whole point behind a tip off was to give someone a little bit of an advantage to say, hey, they might be coming after you and they might hit the road and run. Whereas a 28A from, to compare, is already done and dusted. That person knows he's on the list. Okay. The only additional requirement then in terms of POC-DOTARA is Section 12 of POC-DOTARA, which also requires a reporting obligation, but that doesn't sit in the FIC Act, and that's not reportable to the FIC. Who is it applicable to? We already mentioned it's all persons, so no person may facilitate or provide any form of financial assistance to a person on this list, regardless of whether you're an accountable institution or not. The process then, so I said already, the process, the minute you found someone on the list, the first thing you're going to do is you're going to submit a report. Well, I don't know if it's the first thing. I'm assuming probably freezing is the first thing. You would freeze the account. Freezing an account means no money in, no money out. So whether they owe you or you owe them or whatever the case may be, you block that account. Whatever word you want to call it, you block it. If you think about it, if you don't block it and you do know that they're on the list and you do accept your last bit of an installment and you do pay out whatever it is that you're supposed to, maybe the last payment of a loan, the sale of the car, whatever the case may be, you and what the FIC Act says you're not allowed to do in relation to those specific lists. So no, you cannot proceed with a transactional business relationship. You have to freeze the funds or the property. Remember, it doesn't just mean cash. It could mean physical assets as well. And then obviously you need to then report it through to us. The last thing then just to mention on the two issues is where can you find the lists? So the SAPS list, or the UN 1267 list, should I say rather, there is a link available and it's also available on the United Nations website. Something that's important to note is that you might see a time delay between the SAPS website and the UN website. Okay? Note that the UN website is always the most up-to-date list, whereas the SAPS one might have a little bit of a delay. And I'm going to talk a little bit later around what happens when there is that delay and what is required of you. The last issue then is for the TFS list under the FIC Act, and that is available on the FIC website, and there's the link for that. If I can also do a shameless marketing plea, because I am very much proudly a FIC employee and I really believe in the cause. I think what's important to note is, it is our obligation and it's our requirement to implement a sanctions regime in South Africa. We have put it in the legislation, we have issued guidance, and I think something that the FIC really went over and above what was required of them is to implement a searchable functionality. So you don't have to purchase anything for a TFS list under the FIC Act. You can go onto the FIC Act website, you can search, you can use fuzzy logic, it will pull an audit report for you with a timestamp, etc. So I think that was a really, really awesome initiative that I was very privileged to be involved in. All right, so I've only got two different concepts that I want to discuss now that we've briefly outlined the difference between the two lists. There's two things that I want to still address. The one is around risk considerations, which Lee's mentioned earlier, from a risk-based perspective, you can't apply the exact same thinking as you would from a money laundering perspective. Because just because you're a low-risk client doesn't mean you don't need to scrutinize your information. And the second one is just around certain terminology that's used in the market. Now, if you have a look at the term screening, Screening is a term that's used very often. And if you have a look in the FIC Act, and I actually I checked it yesterday just to see how many times the word screening comes up, and it comes out about 3 or 4 times. But screening in our Act, you know, we use that word specifically like we would do a security screening clearance on the director and the employees to make sure that, you know, we can work where we're working because we have the relevant security rate screening. When we talk about screening in the context of TFS or targeted financial sanctions, the Act specifically refers to the words scrutinize. So scrutinizing of information. Now, scrutinizing of information can take place in many different forms. And one of those forms can be screening. So we do have the 2 lists. The 2 lists are searchable, and you can essentially screen against that client list. We don't also specify how much information you need to obtain from a screening perspective. But remember, we don't work in isolation. You have your AML obligations, you have your TFS obligations, and the 2 of them need to overlap. And the 2 of them are very reliant on one another. So, well, should I say your screening is very reliant on your AML provisions, because your AML provisions would say, okay, what information am I going to obtain for the client? Do I have sufficient information, firstly, to make a risk determination from a money laundering perspective? And secondly, do I have enough information that I can scrutinize and make decisions off of this information to determine whether my client presents a risk from a terrorist financing perspective and whether they are actually on a particular list? All right. So if I can take you to the back to the presentation, you'll see then that you know, Section 28A talks to the scrutinizing of information. Remember, this is your reporting obligation. So accountable institutions have that obligation. It's a positive obligation. You need to scrutinize sufficient information in order to make a determination if your client is on any particular sanctions regime list. Now, Guidance Note 6A guides you with how you can go about scrutinizing. So just some examples is an automated screening of a client database that takes place in real time. You can have ongoing screening of existing client database to detect potential matches, specifically when there's now changes to the UNSC sanctions list. You could do screening of cross-border payments, and most importantly, to have a holistic view of the information across all points of engagement. And that's what I was referring to. Don't work in isolation. Have a look at the information that was obtained. I know in some of the sessions, people often say, okay, but from a POPI perspective, you know, I'm not allowed to share this information. I'm not allowed to, you know, use it for purposes that it wasn't requested for. And what I can tell you is there is a carve-out in the FIC Act, and there is a carve-out in POPI that says specifically when it relates to money laundering or terrorist financing, you're entitled to use that information for purposes then to be able to make a determination and then to submit the reports through to the FIC. So please don't worry about, you know, a POPI contravention, because it specifically says for your compliance with regards to terrorist financing and money laundering. Okay, so some risk considerations then that I'm going to conclude with. Lee's already opened it nicely for us around sanctions are not dependent on risk consideration. So you can have a low risk client, but they can flag on a terrorist financing list. And that's very important, especially when it comes to scrutinizing. And there's 2 important concepts. There's understanding my terrorist financing risk, and there's knowing if someone is on a list. Now, understanding that risk will guide you and assist you in how you go about scrutinizing your client's information. So for argument's sake, you know, there's no South African currently on these lists. You have a South African client. They are South African employed, they're getting paid in rands. It's, you know, an average amount for what their profession is, or they're purchasing a house or a vehicle or whatever the case may be within, you know, relative to their salary. It is going through a bank, for argument's sake. Would your terrorist financing risk maybe be considered lower? If that is the case, it doesn't mean that you're not allowed to scrutinize your client's information, okay? And the reason why we say that is a very easy way for someone also to avoid detection is to, I mean, they also know these indicators. They can also, you know, live a life under the radar and potentially be a lower risk from a terrorist financing perspective, but could still potentially be on the list. So these are the two concepts that you need to understand. I already mentioned then that you must scrutinize all clients' information regardless of the risk. However, there can be scenarios, and this comes now verbatim from the PCC, where it says that clients' details are scrutinized more frequently than others in order to identify and mitigate the heightened risk of an institution dealing with a sanctioned person. Following a risk-based approach, the higher the targeted financial sanctions risk that would apply either to client type, product, service, jurisdiction, etc., the greater the level of scrutiny required. So in other words, there'd be no instance that you cannot scrutinize information, but there may be an instance that you would scrutinize it more. Okay. A more light-hearted debate then, one that isn't such a such a big one to grapple with, is what happens when the sanctions list is not updated on the SAP's website. And remember, that was the list on the left, the UN 1267 list that we said, there might be a time delay in terms of having this list updated by SAPs. What you need to do is you need to be aware that there is an update that would need to be made, or a review that you would need to make. And what we need to stress is, the sanctions list only become applicable when it's promulgated and commenced. So once we gazette that list, or we've added that particular name for argument's sake, then that becomes relevant in our regime. If SAPS hasn't updated their list and there's no commencement for the updated list, you wouldn't have the risk of non-compliance from a South African targeted financial sanctions regime perspective. But what's important, and what I mentioned in the beginning, is there might be an international sanction provision and a business risk that you're now sitting with. And if I can make it maybe a practical example, someone is added to a particular list, you are an international organization, this person flags on your list, and you say, okay, well, you know what, it's not on the SA sanctions regime, I'm not going to do anything and I'm going to carry on with it. Now, your business is tied to the UK and the US, and as part of that arrangement, you're required then, in terms of their legislation, to ensure that you adhere to their lists. Okay, so there again it comes, and this is obviously more for larger organizations, but you need to understand that risk that is there. If you want to err on the side of caution, you are able then to submit an STR through to the FIC as well. Okay, the last issue then that I want to talk to you about is just around corporate structures. The PCC also talks very briefly around that in terms of, understanding where the sanctioned person may lie in the structure. So, I mean, the simplest one is you have a person who's on the list, they go to an institution and they want to buy a house, or get, open up a company account, or open up a trust, or whatever the case may be in your accountable institution. You screen them, they flag. That's too easy. And that's why people hide behind corporate structures or corporate vehicles. Think about it. It's like driving a car. If you look out on the road now, I can't see from where I'm sitting. I look out on the road, I'm going to see, I don't know, a Volvo. I'm not going to see the person in the Volvo. And that's the exact same concept. So people sitting inside the car are driving the car. They're getting transported from one place to another. They're benefiting from it, but people are seeing the car. And that's the whole concept behind a corporate vehicle, is you create an entity and you then sit or hide behind that entity. And you would then, in many instances, or not you, but the sanctioned individual would be the ultimate beneficial owner, because they're the one who's ultimately benefiting from this particular arrangement, okay, or pulling the strings and making the decisions behind it. And this is the concept that was then brought through in the PCC, is that a sanctioned person may attempt to hide behind the structure or structure transactions in a way to distance themselves. Why would you want to do that? Well, obviously you don't want to be associated, because you know your funds are going to be frozen. Accountable institutions must consider the risk of being misused unwittingly and unknowingly. So in other words, you can't be ignorant. You can't say, oh, it's a company, therefore I don't have a sanctions issue because there's no companies on the list. The people might be sitting behind that company. And that's why we say, when you have a look at it, you shouldn't stop straight at the client. You need to look at the client. Is the client acting on behalf of another person? Is another person acting on behalf of the client? So in other words, if there's an arrangement where you maybe have a curator, or whatever the case may be, a person with authority to act on behalf of your client. And then also, is your client linked to a sanctioned person or entity? So this brings in the concept again around who is your client actually associated to. So who is the, who is the beneficiary to a life insurance product, for argument's sake? Who is the trustee to a trust? you know, those sort of things. So what is that link? Are you linked to a politically exposed person, etc.? And then, like we mentioned earlier, making use and scrutinizing the information where it is available. Touching very quickly on screening, and I know we already mentioned it earlier, so I'm not going to, you know, elaborate too much on it. All I want to remind you around the screening concept, remember, we actually talk about the scrutinizing of information, you know, but using the term loosely, you know, is screening enough to manage your terrorist financing risk? And what we're saying here is the scrutinizing of clients' information also shouldn't be a tick box. So you can't just say, okay, I've done it, therefore I don't have a terrorist financing risk. Accountable institutions must understand the risk that they face. In doing so, how do you do that? Well, you look at your product, your service, your jurisdiction, etc., which Guidance Note 7 unpacks nicely for you. You know, am I making a payment to a country that is known for terrorism? And if you have a look at the lists, you know, things like potentially, you know, the DPRK, the People's Republic of Korea, Iran, Iraq, you know, if we're making payments to those particular countries, would that risk be higher or not? And then lastly, then you may need to limit your business activities to the persons and countries on the basis of identified money laundering and terrorist financing risk, where appropriate controls to sufficiently mitigate any TF risk are not possible. So we're not saying you're not allowed to make a payment, obviously, you know, within the realm of the sanctions provision, but it all boils down to your risk tolerance, the understanding of your risk. And where that risk is perceived to be too high, that's a decision your business needs to take of whether you are happy to go ahead with it or not, bearing in mind the consequence of going ahead with such a transaction, and they would be a sanctioned individual. All right, so that brings me then to the end of the PCC discussion. I know it really was a mouthful, but it will, when we send out the presentation a little bit later in the week, we're going to send it out before the end of Friday. What I will do is I'll include the PCC into the documents or into the email as well, so you can have a read through the PCC if you haven't done so. And also quite important, just remember the other PCCs and guidance products that are linked to it.